everybody. The charts that I'm about to show you are going to make it extremely clear to you what is going on in the markets at the moment. What we are witnessing, what we're going through is capital rotation. Now, this is a chart of Nasdaq versus gold. Might look a little bit overwhelming and confusing at first, but let me explain it for you in very simple terms. When the chart is going up, it means that Nasdaq is outperforming gold. That's sending the ratio upwards. This is a ratio chart of Nasdaq versus gold. It peaked in 2000, March 2000. That's when Nasdaq had a peak valuation versus gold. Then the chart fell, and this was a massive gold bull era between 2000, 2012. That was a massive gold bull era where the stock markets went nowhere. In fact, they fell by 30, 40, 50%. The Nasdaq fell even more. So that was a huge warning when this chart broke to the downside. And by the way, when you're below this green line, that's the 4-year moving average, and when you're below this sort of red and green splodge, which is something called the Ichimoku cloud, then you are in a technical bear market on this chart, and that is a bear market for Nasdaq versus gold. And then when we got to around about 2011-12, the chart started to move up again, and we went above the green line, above the 4-year moving average, and above the Ichimoku cloud. That was telling us that the gold bull era was over and the Nasdaq was about to outperform gold over a prolonged period of time, which it did. But it did not get as high as it did in March 2000. In fact, nowhere near. So, uh, as we stand now, today, the Nasdaq peaked, tech stocks peaked versus gold 25 years ago. And not only that, but we are now rolling over into a new bear market on this ratio chart. We are below the green line, the 4-year moving average. We're below the Ichimoku cloud, and we've fallen nearly 30% since November 2021. So the Nasdaq has lost 30% of its valuation priced in gold since 2021. Now, this loss of valuation priced in gold is a precursor to stock markets plunging in US dollar terms. So Nasdaq is rapidly losing valuation priced in gold. Now what I'm going to do, I'm going to go through the S&P sectors. The S&P is made up of 11 sectors, and we're going to look at how healthy the S&P 500 is. So this is communication services. It's in a bear market versus gold. This is the communication services versus gold chart. Below the 4-year moving average, below the Ichimoku cloud, broken down below support. Look, from 2021 to where we are now, this chart has fallen enormously. It's down, what, 35%. Bear market. Communication services are in a bear market priced in gold. Consumer discretionary in a bear market priced in gold. Below the 4-year moving average, below the Ichimoku cloud, below critical support. I'll pop it on the line chart for you so it's a little bit clearer perhaps. So this again is one of the 11 sectors of the S&P, and bear markets are when you are below the green line and the Ichimoku cloud. Bull markets for the consumer discretionary are when you are above those things. So consumer discretionary is in a bear market priced in gold, and that's a precursor to being in an outright bear market priced in US dollars. XLP, consumer staples versus gold. Consumer staples are in a terrible bear market versus gold, plunging like they've just fallen off a cliff, way below the 4-year moving average, way below the Ichimoku cloud, way below key support. This is in a massive bear market priced in gold and has been for the last 25 years. XLE, well, when I say it has been for the last 25 years, it went into a bull market and then very quickly rolled over back into a bear market. So overall, from the peak 25 years ago, this thing has just continued down. Energy versus gold, bear market. It's below the 4-year moving average, below the Ichimoku cloud, and this chart just goes down and down and down and down and down. Gold is massively outperforming energy. XLF financials, they're in a bear market versus gold. Below the Ichimoku cloud, below the 4-year moving average, the technical chart pattern has broken down, and this is a precursor to financials rolling over into a bear market priced in US dollars. XLV, healthcare versus gold. This is what capital rotation looks like. Capital is rotating away from the S&P sectors towards precious metals and commodities. Gold is giving that warning, just as it did previously when we had this massive bear market. for healthcare versus gold. That coincided with a huge gold bull market where gold went up by hundreds of percent and the stock market plunged. Looking at industrials, again, we're in a bear market priced in gold, below the 4-year moving average, below the Ichimoku cloud, below the key support line. Again, another precursor to what's coming. Materials versus gold. We are below the 4-year moving average, below the Ichimoku cloud, below key support. We are in a bear market. XLRE, this is real estate. Absolute disaster priced in gold. It's broken down below all support, below the 4-year moving average, below the Ichimoku cloud. We're down now 61, 62% versus gold. This is all a precursor to what comes next. This is capital rotation right in front of your eyes. The big one now, this is technology. Technology peaked versus gold all the way back here 25 years ago in February of 2000, and then went into a massive bear market all the way to 2011. Nasdaq plunged, gold went up hundreds of percent. It doubled, then it doubled again, then it doubled again. Gold is doing the same again now, right in front of your eyes. It's already doubled. It's going to double again, and then it'll probably double again. We are below the 4-year moving average, breaking down below the Ichimoku cloud. We've fallen now over 28% priced in gold. Tech is rolling over. XLU utilities priced in gold below the 4-year moving average, below the Ichimoku cloud, below the key support level in a massive bear market priced in gold. Bear markets in gold are precursors to bear markets priced in US dollars. This is a warning. If you are not watching these charts, you are not going to be ready for what is coming next. Yes, gold may pull back, gold may have a significant correction, but the macro picture is favorable for precious metals and commodities over the next 10 years and very, very unfavorable to risk assets. That is the stock market, tech stocks, and I suspect cryptocurrencies, which follow a leveraged version of the Nasdaq. So I've been saying this for years. The chart has been moving in the direction that we have been predicting for the last several years. You can see the breakdowns in progress. This is, I'll say it one more time, capital rotation.